Chapter 4. Greed. Greed is a basic part of animal nature. Being against it is like being against breathing or eating. Ben Stein. There's a lot of confusion in the trading world about greed, including how to solve it. The solution isn't just to be less greedy. That's like saying be less ambitious. Here's the truth. What makes solving greed so challenging is that there are actually no flaws unique to this emotion. Instead, you'll find the roots of greed lie in the flaws, biases, and illusions that cause fear, anger, overconfidence, and lack of confidence. Most often, they lie in overconfidence. Overconfidence is that feeling of invincibility, thinking you can turn a trade into a winner, and that you'll make money with ease. Carelessness, a fuck it mentality, blind faith and being blind to risk. Excess ambition in this way is overconfidence in both your ability to make money and in the way you'll make it. On the flip side, if greed comes from a lack of confidence, you'll feel like nothing is ever good enough, no matter how much you make. Your greedy drive is that constant push for more money, based on the false idea that it will yield lasting satisfaction, pride, or confidence. Or a drawdown triggers questions about your competence, and you get greedy to quickly eviscerate any doubts about your ability to make money. Anger is a common co-conspirator. Revenge trading is epitomized by the intensity that follows a string of unlucky losses. The trades that stop you out by a tick, only to race to your profit target without you. That emotion may seem like greed, but it's anger. You double your next position and it quickly stops you out. Now you're pissed because you know you're making mistakes, and you force another trade trying to make up for it. To a lesser degree, fear can lurk behind greedy impulses. FOMO is the most common problem. You don't want to miss a big move, and you greedily get in too late, just in case the trend continues. There's a panicky feeling that happens when you see other traders making money, and you want to do so as well. You end up chasing price, and justify a worse price because the opportunity still feels right. Aside from FOMO, the fear of loss, mistakes, and failure can all drive actions that appear greedy. While the whole point of trading is to make money, greed actually costs you money. Your unrestrained desire to make more forces you into decisions that in the long term make you less successful. The market punishes your attempts to squeeze out every penny and make the maximum return from every trade. Of course, that's not always the case. Sometimes greed is rewarded with massive winners or perfect exits. But you wouldn't be reading this if you didn't think greed was a problem. There are lots of theories and debates out there about the positive or negative role that greed plays in society at large. That debate is beyond the scope of this book. My focus is simply on improving your execution and performance as a trader. And for many of you, that means curbing the damage that greed does to your profitability. That may seem counterintuitive to the generations who grew up on Gordon Gekko's famous "greed is good" speech in the movie Wall Street. Only we must remember the full quote. Gekko's actual words are, "The point is, ladies and gentlemen, that greed, for lack of a better word, is good. For lack of a better word is the point of distinction. Ambition is the better word." The nature of greed. In trying to understand the nature of greed, it's helpful to look at Merriam-Webster's definition. A selfish and excessive desire for more of something, such as money, than is needed. Since we're discussing this from a performance standpoint and not from a societal one, we can remove the beginning and end of the definition. That leaves the phrase, an excessive desire for more, which perfectly summarizes the problem. Greed is the emotion that indicates the point where your ambition becomes excessive. Ambition is the competitive drive to be great, more successful, or earn more. It's what motivates you to read books like this one, to further hone your craft. Ambition is the drive to win, balanced with the understanding that losses are both inevitable and often helpful in reaching higher levels of success. You wouldn't call the ambitions of Michael Jordan greedy, or for that matter any athlete who strives to win at the highest levels. No, we'd say they have an intense hunger, will, or drive to win. We applaud their relentless effort and outsized dreams. Is that greed? Of course not. Think of yourself like an athlete, and greed becomes simply a performance problem. Greed exists in every competitive arena. While the aspirations of athletes to win wouldn't be characterized as greedy, that doesn't mean they aren't greedy while competing. But as observers, we can't say with certainty which decisions are greedy or not. Intent matters. Consider the athlete who tries to make a big play, like a lineman in football attempting to pick up a fumble and run with it, or a baseball player trying to score from second base on a short single to center field with 2 outs in the bottom of the ninth of a tied game. Whether or not they're successful, if they assess the risk as usual, then a healthy ambition and drive to win is likely what drove the decision. If, on the other hand, there's a drive to achieve personal glory above the aims of one's team, or a need to prove to the skeptics that they deserve to be classed as a professional, then it's likely some level of greed has affected the decision. The excessiveness that characterizes greed is different for everyone and can't be judged from the outside. There will always be the outliers, those traders who produce massive returns over a long period of time and appear greedy. For them, however, it may not be greed. It just looks that way. You can't know from the outside when someone else has crossed the line from ambition to greed. Remove the comparisons and focus on yourself. Where is that line for you, where ambition turns into greed? You likely already know. It's when you just can't stop yourself. The common advice sounds simple enough. Don't let greed get the best of you. You can't build an account in a single trade. Stick to your trading plan. Be disciplined and patient. But in the heat of the moment, your drive to make money supersedes that logic. And it's difficult to know when and when not to curb that drive. Ultimately, that's not even how you want to be trading, having to constantly be on the lookout for greed and reining in those impulses. Like a thoroughbred in a racehorse, you run faster when you're free to run as fast as you can, not when the jockey is constantly pulling on the reins. In a business where fortunes can be made and lost in a flash, you can't rely on having to quickly decipher if greed has hijacked your decisions. The goal is to correct the underlying flaws, illusions, or biases that turn your ambition into greed. Then you can drive yourself as hard as possible, knowing that you'll automatically make decisions within your strategy, because you know that's how you make the most money long term. Common signs of greed. When ambition reaches a point where decision-making becomes compromised, that's greed. You start focusing more on the money and your account balance, rather than the percentage or price action. You feel like you need to be making money, and so you race into a trade. As it intensifies, your judgment becomes even more clouded. You miss a clear exit point and think about the killing you're about to make, reveling in your own brilliance. Then what happens? You end up making decisions you know are wrong in the long term, but you can't help yourself. You're driven to get the best possible entry and exit, make massive returns, and profit from every single trade. There's an unquenchable thirst for more that's never satisfied. It needs money now, and that intensity blinds you to risk. Greed ignores risks and seeks to earn money without regard for edge, strategy, or system. It emerges in a wide variety of situations. There's a blind optimism that things are bound to go your way and keep going up forever. Or you fantasize about some high P&L number that you want to make from a trade, set your target too high, and imagine what you'll do with the profit. You're not assessing the whole situation and determining if it's worth the risk. You're only focused on money and can't see how you'll lose. You get over-leveraged, oversized, add to winners, open too many positions, and think you can outsmart the market. You don't sell. Let winners run is what you're supposed to do. So you move your profit target, thinking you can turn it into a home run. Or maybe you sold, but immediately get back in because it could be a monster, and you'll kick yourself if you were on the sidelines. For some traders, greed only kicks in during a drawdown or after a string of break-even trades. You feel like you have to make money right now. Money is all you're focused on. You see other traders taking trades and making money, forget that there will be more opportunities that fit your style, and greedily go after everything you can. But you get stopped out again, and immediately re-enter at twice the size. Maybe you get a little lucky and you're back in the green. Now you want more, and try to squeeze out every cent and hope it doesn't retrace. Some of the specific signs of greed may also include bragging about winners, talking about how much you're up in your positions, and making it seem like you have it all figured out. Building positions that are too large or too concentrated, thinking you can't lose. Shortcutting your usual process to race into a trade because you see others piling in. Feeling like you have to be making money all the time. Always wanting more, never feeling satisfied. And yet, at times, avoiding the hard work and discipline required to do it the right way. Now that you have some ideas of the signs of greed to look out for, you're ready to map your pattern. Mapping your greed. In those moments when you cross the line and make decisions that are counter to what you know is correct, you're not making a conscious choice. Greed is taking control, and you're compelled to take the trade, stay in it, add to it, take on more leverage, or squeeze out every tick. Emotions are powerful, especially greed. And to have a chance at correcting them, you need to map the signals that indicate an escalation. The following steps will help you create an actual document that will become your map of greed. Step 1. Over the next few weeks, pay close attention to your pattern of greed. Examine and capture the signs that greed has become a problem, including thoughts, emotions, things you say out loud, behaviors, actions, changes to your decision-making, changes to your perception of the market, opportunities, or current positions, trading mistakes. Also be sure to spot the things that trigger greed, such as winning, a string of losses, or sensing a monster opportunity. Keep a document open on your computer or a notepad next to you while you trade, and take notes throughout the day. At the end of the trading day, review what you found and add additional details. Be as comprehensive as you can. When you first take notes, there's a lot of brainstorming. You're not going to identify all the details perfectly the first time you do it. If this is really hard for you at the beginning, don't worry. Everyone has their own starting point. Use what you find and build on it over time. If it takes you 3 months to get it right, so what? As long as you keep working and thinking about it, you'll learn more and get closer to a complete picture. Here are some questions to help you get started. What situations typically cause you to become greedy? How does your body react? For example, are you jacked up, ready to fight, or hyper-focused? Can you describe the point where ambition becomes excessive and turns into greed? What specifically is going through your mind? What thoughts do you have? How is your decision-making process different? What is the earliest sign that greed has become a problem? Mapping greed is an iterative process. When you spot new details, even just slight adjustments, be sure to add them. Small details matter and can make the difference between making progress or not. Step 2. Now you're going to organize your notes into a chart that assigns a level of increasing severity using a scale from 1 to 10 to each observation you made. For instance, ranking something a 1 would characterize a slight urge to force results, while ranking something a 10 would indicate unrestrained greed. At each level, identify details that clearly distinguish it from the other levels. As you assign levels of severity, split them into 2 categories, the mental and emotional side of greed and the technical side. They sit side by side. So for example, level 1 on the mental and emotional side corresponds to level 1 on the technical side, and so on. Be sure to base this on your personal experience of greed. Everyone has their own range, and if you judge yourself against another trader, you're at risk of over or underestimating the severity, which will make your strategy less effective. You also don't need to have details for all 10 levels. Most traders I work with aren't able to distinguish their pattern to that degree. Complete as many as you can, making sure you complete a minimum of 3. Here are some questions to distinguish the differences in each level of greed. What triggers the initial urge to force profits at level 1? How does it then increase or accumulate to reach higher levels? For example, after closing your second winning trade of the day, you start thinking about having a career day and ignore your strategy. As a result, you move your profit target on an existing position. When it pays off, you start blindly entering trades assuming you'll win. What are the signs that greed is small and still manageable? What are the signs that greed has become uncontrolled, completely disrupting your execution? How is your perception of the market, opportunities, or current positions different when your greed level is higher? How does your decision-making process differ at level 1 compared to levels 5 and 10? Then take the details you've categorized and put them into a map like this. Greed level. Describe the thoughts, emotions, things you say, behaviors, and actions that highlight each level of greed. Complete at least 3 levels. 1. Start thinking about the utility of money, wanting to lock up the gain. I want to have that big trade to secure the profit and achieve better returns to see progress. 5. Wonder if I should move my profit target. Really close, I could secure it now, but I could move the target farther away. If I push the trade farther, I'll be secure for longer. 6. Wonder if I should trail my stop. I don't want to give anything back. More irritated with people when they ask about my trading. 8. I give up my trading plan, but maintain a clear stop and profit target so it's still safe. Much more personal. Is the market with me or against? 10. I want to make the absolute best return right now. Give up all control and am only focused on making money right now. No longer-term thinking. Technical level. Describe the quality of your decision-making, perception of the market, opportunities, or current positions at each level of greed. 1. No change. 5. Start feeling emotions in terms of my trading plan. There's an urge to change things. 8. Don't have a plan. It's all based on how I feel the market is moving. Move, stop, and profit targets. Perception is more about money. 10. Manually manage the trade. Looking at every single minute to get the best price by looking at every single change in the market. Looking at every 5 or 10 minute candle versus 1 to 4 hour candle. Trades usually last from 1 day to 2 weeks. Some of you will assume this step is impossible because your signs of greed are all extreme. The small signs are there, you just can't see them yet. This is an iterative process. Continue to work the process by paying close attention to the buildup. Remember, one of the best times to do this is after an instance where greed got the better of you. Be a detective. Look at why it reached that point and the signs you could detect next time. Once complete, you have a solid draft that you can use while you're trading to recognize your pattern and quickly respond with the correction. Since these patterns can take a lot of experience and training to correct, don't revise your map until you get consistent evidence that it has permanently changed. The real cause of greed. You may be able to determine some of what's driving you, greed or other emotions, when you do your mapping exercise. But to really assess greed, you need to know what's driving the decision, and that's up to you to determine. What might be a greedy trade for one trader could instead be a well-executed one for another. The key is to clarify what flaws lie below the surface of what you perceive to be greed. To help make this point, let's look at 4 stories of traders who each identified prior to coaching that they had a problem with greed. And in each situation, the flaws associated with fear, anger, overconfidence, and a lack of confidence proved instead to be the main drivers. First up is Alex, a 16-year trading veteran from Germany. He worked for years in a big firm as a market maker for power and natural gas options. Currently, he works for an oil trading group, and he's mainly responsible for their algorithmic options trading. He also trades a personal account on the side, which is the main reason he came to me for coaching. For Alex, greed showed up in a specific way. He felt that he wasn't making enough money on his winning trades. He'd catch himself fantasizing about some high P&L number that he wanted to make, and he was often filled with regret for getting out too early or being talked out of trades that would have made him a ton. At first glance, Alex's example of greed is minor in comparison to the other stories you're about to read. However, his story is important to highlight because even small instances of mental game problems coded as greed need to be corrected. As you'll read in the continuation of Alex's story in the next chapter, greed was signaling a fear of being wrong that caused him to legitimately underperform in a big way. He had good reason to think about those high P&L numbers, as he was missing out on a lot of potential profits. Roderick, on the other hand, a trader from the US with a decade of experience trading all the global CME products, US stocks, and Forex, had a much more visible version of greed. He's an incredibly hard worker who would react very poorly to a loss or mistake. Immediately, he would force trades, trying to make more than the market was giving him. He would try to recover, but spiral out of control, ultimately losing a lot of money on the day. Conversely, on the days where he made money easily, he would want to make even more. No amount was enough. When greed showed up for Roderick, he would attempt to earn without proper edge or system. He knew this, and initially assumed that worrying about money for life and bills was the problem. He tried putting away all the money that he needed for an entire year to take care of himself and his family, but that didn't change a thing. Perhaps it's a gap in knowledge, he speculated. That idea drove him deeper into the markets, trying to gain more and more knowledge, and yet no matter how much more he learned, his greedy attempts to make money continued. As we began our work, it became quickly apparent that what Roderick thought was greed was actually anger. He hated to make mistakes, and in his mind, losing was a mistake. He expected to make money on every trade, to trade better and make more money, and to never miss an opportunity. Failing to meet any of these expectations meant that he wasn't perfect, which triggered an explosion of anger. In Chapter 6, I'll continue Roderick's story, and you'll see how he was able to fix his unrealistic expectations of perfection. Next is Max, a Forex trader from France. He began trading 5 years ago to prove to his friend that he could do it and became hooked. For the last 2 years, he's been able to sustain a full-time income and eventually wants to get investor funding. To get there, however, he first needs to get control of his emotions, namely greed. On the surface, Max is happy with his progress, but there's a hidden urge that he constantly fights against. For example, when price is in a great zone, even though he knows to wait for the right entry, the idea that he could make so much money that it could change his month causes him to jump in so as not to miss it. He also wants to make money because it gives him a good feeling, like he's making progress and knows what he's doing. For Max, greed gets worse after a string of break-even or losing trades. He wants to make the absolute best return right now, and he loses sight of the long-term strategy or value of having made a plan. He can't wait and will eagerly take a marginal trade. Between our first and second sessions, Max worked incredibly hard to map his pattern of greed and was able to distinguish 10 levels. The sample map from the previous section was a draft that he put together prior to our first session. Here's the second version. Greed level, second version. 1. Logging into my brokerage account to have a brief look at the P&L I'm currently running in a trade. Feeling good if it's positive, but not negatively impacted if it's a loss. 2. Start thinking about the utility of money, wanting to lock up the gain. I want to have that big trade to secure the profit and have better returns to see progress. 3. Thinking about how much more percent or dollar return I need to cover expenses this month and next month. I feel excited about these trades and I think this is great. I'm back on the ball. 4. Wonder what other people will think of my trade. Other traders, family, investors. I'm happy to talk in depth about my position with others instead of being brief and humble. I want to share and be a show-off about it. 5. Wonder if I should move my profit target. Really close. I could secure it now, but I could move the target farther away. If I push the trade further, I'll be secure for longer. 6. Wonder if I should trail my stop. I don't want to give anything back. More irritated with people when they ask about my trading. I stay in front of the computer even if I don't need to monitor how the market is moving. 7. I don't want to lose or give back money to the market, so I keep thinking nonstop about my trade. I'm hunched over, looking at my screen, and don't do a lot more than stare at live charts. I can't get myself away from them. 8. Trading feels much more personal, like the market is with me or against me. I give up my trading plan but maintain a clear stop and profit target, so it's still safe. 9. I think the market is controllable. I think I can understand the flow of the market. Whenever it goes higher or lower, I can predict it. Staring at my screen, snapping at people as soon as someone talks to me. 10. I want to make the absolute best return right now. Give up all control, and I'm only focused on making money right now. No longer-term thinking. In Max's original map, the first signal of greed was thinking about the utility of money. But now that's at level 2, and the first clue is looking at the P&L of an active trade. This is important because it enables him to correct greed sooner while the scale is small. Looking at the deeper emotions fueling his greed, you'll notice the 2 sentences in bold provide the clues. Greed is fueled by a weakness in confidence. Max has reasonable aspirations, but the deep urgency to prove himself causes him to make decisions outside of his strategy. In Chapter 7, we'll pick up his story and show how he was able to eliminate greed and make significant progress with his confidence. Let's look at another trader. When I first met Chris, who was from the US, he had been trading full-time for about 7 years. He typically day trades stocks and US index futures and swing trades Forex and options. For Chris, greed compelled him to ignore pre-planned targets and try to hit a home run. More often than not, it hurt him, but he couldn't help it. The threat of regret carried a lot of weight and forced him to push too hard to avoid missing out on what could be a home run. The roots of his greed were planted before he became a full-time trader, when Chris sold way too soon out of a stock that he had planned to hold. Within a month of selling, the company was acquired, and the gains would have been life-changing. A decade had passed, and yet the pain was still fresh. As we analyze why, also looking at the reasons why he would cycle through periods of overconfidence and lacking confidence, and the times he would get pissed off and doubt his strategy, all roads led to one place, an expectation of perfection. In Chapter 7, you'll see how Chris resolved the pain from selling that stock and removed the emotional volatility that came from his quest for perfection. You may have noticed that 2 of these 4 traders had an expectation of perfection as the underlying cause of greed. This is a topic that I talk about in fear, anger, and confidence chapters because it's a common cause of emotional instability among highly motivated people. I applaud the aspiration to be perfect and the desire to achieve success at the highest level, but expecting to attain perfection is a different story. Because it's impossible, expecting perfection always causes emotional instability in your mental game. As you saw in Alex's story, greed can have close ties with fear. Fear of failing, fear of underperforming, fear of ending the day with less money than you started with. Trading is associated with a host of fears. In fact, you may be so familiar with fear in trading that you assume the emotion must be there. A certain amount of nervousness is a given, yes, but by drilling down into the specifics of what makes your fear excessive, you can ensure that it doesn't damage profitability. That's exactly what we'll look at in the next chapter.